Listen, if you watch this video until the end, you are going to understand trading and price action in a way that you have never seen before. I can guarantee it. There's a whole lot of information out there on how to trade price action, but nobody will break it down the way that I'm about to for you in this video. If you can master just this, you don't need any indicators, you don't need any moving averages, you just need a chart. No more talking, let's dive right into it. So price action trading is just the ability to trade just using the charts. It's also called naked trading for a reason. You just have the chart and that's it. It's naked. The ability to read price action is just the ability to basically understand the language that is being spoken by the action in the charts, the price action. The price tells a story, and a lot of people forget that every decision is made by a human and their beliefs, their emotions, their sentiments, etc. The chart tells you what people are thinking or what algorithms are thinking. It doesn't matter. The chart will tell you where price is likely to go next if you just understand the 3 P's to price action. And the 3 P's are pitch, projection, and pullbacks. So before we get into the 3 P's, let's start with how to even define whether price is moving up or down. I'm not going to spend too much time on this because many of you probably already understand this and it's nothing new. You have higher highs and higher lows and lower highs. This is defining whether price is moving up or down. Now, sometimes people will say, well, sometimes price will go sideways. In the way that we trade and the way that we understand the markets, technically, we are never really moving sideways. We are always in favor of one direction or the other, and you'll see why in a second. So, an uptrend is defined by higher highs and higher lows. This just means that it's making new highs, so it's breaking previous highs, right? And it's making higher lows because you can't be moving up if you're not making a higher low. If you're making a lower low, meaning you're breaking through lows, then obviously you're moving down now, right? So this is an uptrend. You have higher highs and higher lows. Higher highs and higher lows. Now, a downtrend is the exact opposite. Pretty simple. You have lower lows and lower highs. So if the price is moving down, it can only do so in one way, right? You got lower highs and lower lows. You are making highs that are lower than the previous highs and lows that are lower than the previous lows. As long as you are doing this, then you are in a downtrend. So when I say that price is never technically going flat, it's because you are always technically within one of these moves. You are always either have recently broken a high or broken a low or made a higher low or made a lower high. You're always going to be in between one of these situations. You're either going to be in a swing up or you're going to be in a swing down. It's just how you identify them that can be a little bit tricky. Now, most people would just stop right there. They would say, if you can identify higher highs and higher lows, wait for a pullback and buy. And that's about where the price action knowledge stops. But you can actually get into a lot more detail and get a lot more intimate with the price action and understand at a far greater level where exactly price may be going. So let's break down the 3 P's of price action. So like I mentioned earlier, the 3 P's of price action are pitch, projection, and pullback. Let's define what each one is and then take a look at examples and then even show how we can use it as our very own trading strategy. So let's start with the first P, pitch. So obviously you can have higher highs, higher lows, lower highs. But what a lot of people forget to consider is how are we making those higher highs and higher lows? Are we making a higher high that looks like this? Or are we making a higher high that looks like this? They're two very different things and they spell out a different story. So pitch is going to be the angle at which you are making that new high or new low. Okay, so that gives us an idea of the strength and the sentiment of how strong the actual buyers and sellers are. And you'll see why this matters in a second. So if you, for example, have a higher high and you make a higher high that looks like this, well, that's not a very steep angle. It's kind of a weak move higher because it's taking a longer time to break through that high. So obviously, if there were no sellers, then price would just do this, but it doesn't. It did this, meaning that sellers are fighting all the way up to push price down. There's sellers present. So that tells us that this is not a very strong move higher. And so if price does, for example, this, well, now you have two signs of a potential reversal. You have that pitch to the upside being weak, and now you have the pitch to the downside being strong. So that tells you that, well, maybe you don't want to be looking to buy even though you're technically in an uptrend, right? Because you made a higher high, right? You broke through this high, and most people would say, well, look for a buy, start buying right here. Well, don't be so quick, because you didn't really take a look at how the high was made, and you're not taking a look at how this new move down is being made. So the pitch is just the angle of price action. And if this doesn't make sense just yet, we're going to look at examples. Basically, this tells you whether the buyers or sellers are strong or weak, and you can use it in a lot of different ways, which again, we're going to take a look at. The biggest thing that pitch can help you with is to determine whether you should be looking for a buy early on in the pullback or later in the pullback. So you're either looking for a shallow correction, you can even look for a middle correction or a deep correction. And a correction is just another fancy word for a pullback, right? So let's say you make this new high and now you want to look for that buy on the pullback because you want to follow the trend, right? You're buying on the pullbacks. Because we know that the pitch is not very steep, right? The strength isn't that great on the buy side. It wouldn't be too surprising if we saw price start to go down a little bit further into this swing, right? So in this case, because our pitch is not very steep, right? It's a weak move higher. We can still look to buy, but we wouldn't buy, say, here on this early pullback. Because why? Well, price isn't that strong to the upside, so why would buyers win at such an early level, right? At such an early pullback. Instead, you would probably want to wait for a deeper pullback because that is to be expected when you have a weak move higher like this. So now that you understand, pitch is basically how strong we are making those new highs or new lows by the angle of the price movement, let's talk about the second P, projection. And we're going to put all three of these together to get a complete picture once we take a look at the examples. So projection is going to be, in the case of an uptrend, it's going to be the difference or the distance between the new highs. If you're in a downtrend, it's going to be the complete opposite. It's going to be the distance between the new lows. So let's just use the uptrend example just so we don't overcomplicate things. So if you're in an uptrend, you want to know how strong those new highs are being made. One of the ways you can do that is with pitch, right? Because you have the angle in which price is making that new high. But there's also another aspect to this, which is projection, which is the distance the new high is from the previous new highs. So for example, this move right here, we saw a break of this high and our next high is right here. Distance between these two is going to be our projection. So if you have a projection that is decreasing, that means price is weakening. If you have a projection that's increasing, that means price is strengthening to the upside, because this is a buying example. So when we take a look at this chart, we see that the distance is actually shrinking. The projection is shrinking, right? Because this high made a pretty big move compared to its previous high. But now if we look at the most recent high, we'll see that we don't really make that big of a new move, right? That we haven't really made too much progress compared to this move right here, right? So what we're seeing is a shrinking projection, which is just fancy terms for the new highs are not as strong as the previous highs, which means that price is weakening and may reverse. Now let's take a look at a situation where price is actually strengthening, right? So if you have projection that is increasing, like this, well, now price is gaining strength. Why? Because we take a look at these highs here and the most recent high, and we see that the distance between these two highs is a lot less than the distance between these two highs, the most recent high, which tells us that price is strengthening. So what in this case, if we were trading this, what would we think? Well, we would probably think to buy on this swing, because we see that price is actually gaining strength. Now you can combine pitch and projection in this case for an example that looks something like this. Let's say you have an increasing projection and an increase in pitch. right? So now you have a increase in projection because we're making highs that are larger distance from the previous highs. And you're also doing it in a way where you have a steep pitch, right? So the angle in which you're rising is pretty steep, which means price is obviously strong. So when you have an example where you have increase in projection, right? Because these highs are closer together down here, and now you made a big new high, and then you have this pitch here, which is steep. Both those things combined, good pitch and projection, well, now you know you can feel a little bit better about buying in this pullback. Now, where would you look to buy in that pullback? We are going to cover within the examples soon. But let's move on to the pullback, the last P of the 3 Ps. Pullback is basically the last step in the price action language, and it's going to be very similar to projection. The only difference is now, instead of measuring the highs, for example, in an uptrend, we're no longer measuring the distance between the highs. Now we are going to be measuring the distance between the higher lows, okay? So let's take a look at this example right here. First of all, projection is decreasing, right? You got shorter distances between the highs on the most recent high here. So that's already a sign that price is weakening. But we can also measure the difference between the higher lows, right? So pullbacks, you're just measuring, basically, if you want to put it in kindergarten terms, you're measuring the distance between the pullbacks. That's why it's called pullbacks. Okay, so let's take a look at our pullbacks here. We have our projection here, right? Which is the difference between the highs. Okay, projection is decreasing. Therefore, price is probably weakening. But what if we got a pullback that looked like this, right? So now we have this higher low here, and this higher low here. Well, let's measure the difference between these 3 higher lows. You have these 2 right here, right? So this is a pretty decent move. The distance is pretty big. And so that tells us, well, yeah, price is increasing in strength. But then you come over here and we made a pretty big pullback. And because we made a big pullback, the distance between this higher low and this higher low has shrunk because we made a deeper pullback. So now we get this little tiny distance right here, which obviously tells us that the sellers are increasing in strength. Why? Let's think of it logically. If our highs are getting shorter, the distance between our highs is getting shorter, and the pullbacks are becoming deeper, the distance between the lows are getting shorter. So in this case, price action is actually breaking down and getting weaker, and so you probably wouldn't want to look to buy. But let's take an example where you may actually want to buy based off of the pullbacks. If you have an example that looks something like this, now you're seeing a little bit of a different story. If you have these 2 lows here, and then you're here currently, you're seeing that this distance between these 2 lows is pretty small, but now we make this huge move, and let's say we're starting to bottom out somewhere here. Well, now you have quite the big difference. You have quite the increase. The pullback is shallower, right? You're getting a smaller pullback because the distance between the lows is actually getting greater. So in this case, your pullback is shallower, the distance between the lows getting bigger, and so that tells you that price will likely continue higher because it is gaining strength. Okay, I know this sounds very confusing to some people that may be complete beginners, but let's put it all together now, and let's take a look at some examples. Okay, so we now know the 3 Ps of price action, which basically lets us speak the language of the charts. It's like learning a whole new language. So now let me act as the translator and show you some examples here. This is going to be a bullish example where if you were able to break down price using the 3 Ps, you would have had a pretty nice trade. So let's take a look at this example here. Let's start with this swing high here, okay? We see that we made a big move higher, and then we had this pullback, and then we slowly come back up to this high here. Let's break it down. We saw pretty strong pitch, right? Not really the most amazing projection, but that's okay because we're not really looking to trade this. This is just an example. The trade will come a little bit later. Now, this is a pretty strong move higher because the pitch is pretty steep, and that's just about it, right? It's a strong move higher. You can probably see that with just your eyeballs. Now we see that we get a pullback a little bit past the middle point of this swing here, which is a little bit indicative of weakening in price. Why? Because if we have a very strong move almost straight up like this, we would expect a shallow pullback. We would expect, you wouldn't expect price to pull back more than halfway down, but it did. Still not the end of the world, but then we see this, right? We see that we came back up to these highs here, and we did so in a pretty weak way. Why? Because we had this strong move here, but then we get a deeper pullback than we would really like to see. And then look at how long it took for price to get back to these highs. So the pitch here, the angle in which we're going higher, is actually becoming less steep, right? That tells us that price is weakening. And so it's not too surprising to see that we came back up to the highs after losing strength here with this deep pullback, and then losing strength on the way up as well because we're taking so long and the pitch is decreasing. It's not too surprising to see a reversal. Fine. Now, what do we see? We have to break through this low in order for this to be considered a downtrend, and we do that right here. So now the new trend is going to be a downtrend, and so we would be looking to trade from here to here. You would be looking for a short position. Now, in this case, or what do we see, right? We break through this low, so we take the highest point down to the new lowest point, which would probably be down to here. We see a very strong move down, right? And what else do we notice? We also notice that there is a pretty big increase in projection, right? So now we have something that looks like this, okay? So what do we see now? Well, we see one, obviously a reversal, but two, what is increasing here? Projection is increasing, but so is the pitch. I mean, look at how sharp we moved down here, right? It is an almost straight move down. So what would you expect? You would expect for price to, not do this. It shouldn't come all the way back up here. You would actually expect it to only manage to get a small pullback in. So that's exactly what happens, right? We actually end up getting this small pullback here and then a continuation down. Now, this is where things get interesting. We get that strong move down, and I know we're going to get to the actual trade in a second here, but I just want to break this down. We're speaking the language, right? So we went from strong uptrend to weakening even more to reversal, strong reversal, big move down, and we even get that small pullback that confirms that price is really trying to go lower, right? But what ends up happening? We see that the low would be right here. This is the current swing that we're in, right? From high to low. We make this pullback, and now we break through this low, right? So let's take a look here. Previous high is all the way up here. So this is the distance between the pullbacks, right? If the distance between the pullbacks is increasing, that means that price is gaining strength to the downside because you have this high here, and then the only new high is all the way down here. So it's clearly a sign that anybody trying to buy is just getting destroyed right now because you're barely able to make those pullbacks. But now at the same time, even though your pullbacks are getting more shallow, the distance between your pullbacks is increasing. We see that we were look at projection here, right? Projection would be this right here. If we look at projection, just being the lows here, the previous projection was this right here, right? The distance between these two lows. And now what do we get? We get this. Pretty interesting. Okay, that tells us that buyers may actually be very strong in this area. Why? Even though we had this massive move higher and this tiny little pullback, which shows us that strength to the downside is really strong, right? We still managed to make the projection much smaller here. They were only barely able to make a new low, the sellers. So buyers are now telling us that they're pretty strong. Why? Because the sellers were very, very strong, and despite that, they were able to stop them right here, and the projection is now very small. So that just tells us that price action is weakening to the downside. So let's keep watching what ends up happening. We'll now take a look at this. Okay, projection is decreasing, and now look at the pullbacks. Let's mark out everything here. Okay, projection has decreased, and now let's take a look at the pullbacks. The pullbacks are getting less shallow, or in other words, they're getting deeper. Why? Because the distance between the highs are getting smaller. So this pullback here is much deeper than this pullback here compared to the swings. So we have swing low, lower high, lower low, lower high. So now look at the difference. We are getting much closer highs, right? the highs are getting closer to one another. So that tells us that buyers are making progress to the upside. Now, we're still in a downtrend because, again, we are making lower lows and lower highs. But what happens again? We see that projection decreases or maybe increases by just a little bit. The distance between the lows are now very small compared to this distance right here, right? We had this massive move higher, but now we're just getting these tiny little spaces. That tells us that price action is weakening. Again, it is weakening to the downside, which means that the buyers are coming in. The pullbacks are getting more and more deep, and the new lows are becoming smaller and smaller. Put all that together and you get eventually a reversal. So you get this new high. Now this is where you can look for a buy position. We have this new high being made. We see that price is weakening by everything we just discussed. Big move higher countered by a big move lower that we shouldn't have seen. A weak move higher back to the highs and a rejection of the highs. A strong move lower where we see the pitch is very steep. It's a steep move lower. Now the projection is increasing. The pullbacks are getting smaller, which tells us that sellers mean business. We should be going lower, but that doesn't happen. We don't go much lower. Projection begins to shrink. The pullbacks get shorter. The distance between the pullbacks are getting smaller and smaller. So that means the pullbacks are becoming deeper pullbacks. And then again, they were barely able to make a new low here, which tells us that, again, projection is shrinking or weakening. That tells us once we make this new high and confirm the reversal, that tells us that we have a pretty high probability of doing what? Probably means that we are going to be able to make a new higher low and continue higher here. Okay, so you would be looking for now a pullback to the downside. So what do we see here? So we have our downtrend here that now is broken. Right now we are in an uptrend because we were able to break through these highs. And now many of you may be looking at this and thinking that the chart should be drawn out something like this, right? Where you have this being a higher low, but that's actually not the case. In order to make sure that you actually have a valid pullback, you're going to use the Fibonacci retracement tool, and you're going to go from low to high in an uptrend. And if you're in a downtrend, you would go from high to low. Okay, that's how you're going to draw the Fibonacci retracement tool. And the only way that you have a valid pullback is if you reach the 382 Fibonacci retracement. In this case, we were only able to reach the 23.6 Fibonacci retracement. And so this is too shallow of a pullback and we don't count it. Only if we did something like this down to the 382, and that means 38.2%. If we got down to that or lower, now that would be a valid pullback, but that's not the case. Because this was too shallow of a pullback, the swing is going to be this whole thing right here. Okay, so now we have a low and a high, and that is where we are looking to trade. What would we be looking to do? We are going to look for a buying opportunity on the way down. So let's go into replay mode and play this out exactly how we would in real time. So we have our swing. What do? We just want to make sure that we are buying somewhere below the 382 or at the 382, right? We need a valid pullback to be looking to buy. Okay, so where do we think price is likely to pull back to, right? If we want to buy on a pullback, we need to understand where price is actually going to pull back to. Where would be the logical spot for price to pull back? Well, we need to identify how strong the trend is first. We just made a very strong new high, right? Take a look at these highs here. The distance between these two highs is very big. It is a strong move higher. So projection is strong, right? Projection is increasing. Let's take a look at pitch, right? We had these moves down here, and then all of a sudden this move up here. It's not the steepest move higher, but it is a relatively strong move higher. It's a pretty normal move higher. In this case, pitch is telling us that we have a strong move higher as well. Even though we're not making a straight move up, which would obviously be the strongest, we are still pretty steep. And I'll just say this right now, pitch is a little bit subjective, right? It kind of is a visual thing that you learn over time. This is a strong move. This is a relatively strong move, and this would be a weak move. Those are basically your three pitches. pretty subjective, but it's a language. It's not a complete perfect science. It is a way of analyzing the charts and speaking the language and understanding the story that is being told. So pitch is strong, projection is strong. Given those two things, we would probably be looking for around a medium pullback. Now, how do you define this? What does that even mean? That means that you're probably going to pull back to around the halfway point. And the easiest way to identify the halfway point is going to be using the Fibonacci retracement tool from low to high and looking at the 50 to 61.8% retracements. Why? Because 50% represents the halfway point between this low and this high. And then the 61.8, if you don't know, is the strongest Fibonacci retracement and is just a strong area of support in general. So now we understand that we should probably be looking for a buy signal right in this area here. So we'll draw that out with a box. And again, why do we think that's going to happen? Because we have strong projection and a decent pitch higher. And also, technically speaking, we do have a lot of support in this area. But in general, it's just because we know the strength of price. And if we know the strength of price, then we can gauge how far we should pull back. So let's play this forward and see what happens. Now notice on the way down, what is happening to the pitch? Okay, there's our entry point somewhere in there, and we'll talk about that in a second. But notice what's happening to the angles. What just happened here? Look at how long it took price to get to our area where we would expect it to go, right? Our buying area or our area of interest. It took price longer to make this move down than it did to make this move up. How do we know that? Because the angle is less steep, right? It's a slow, steady decline. What does that tell us? Well, that tells us that obviously if sellers were very strong, what would they do? They wouldn't take this long to go lower. They would just do something like this, right? Just a complete reversal. But that's not what happened. The pitch is less steep than the pitch on the way up, right? So the pitch is actually decreased in strength on the way down, which tells us that buyers are still strong and the sellers are still weak. This is the perfect confirmation for us that we should probably turn around somewhere very soon. Let's say that we buy in this area, and there are different strategies of, when you actually buy in this area. I'm not going to cover that right now because this is just about the language of price action. So in another video, I'll go into more specifics on that. But let's say we're buying somewhere in here. Let's just, for example, say we buy on the close of this candle here. Now we're in a trade. We still need to know where we put our stop loss, and we still need to know where we put our targets. There are two ways that you can trade with price action. In this case, because we're pretty confident in the price action that we're seeing, we're not seeing any warning signs. We saw a projection increase, and now we're seeing pitch decrease on the pullback, which tells us that price is weakening on the way down, which means that the sellers are not very strong. So we have everything that is telling us right now who is winning this battle. It's the buyers, right? The sellers are clearly struggling. And so in this case, what I would like to do is probably again bring out the Fibonacci retracement tool and just place your stop loss below the next big level of support defined by the Fibonacci retracement. So in this example, we're buying at the 50 to 61.8 level. The next level down is going to be the 786. So let's just put our stop loss below the 786. If we saw some warning signs, for example, if we saw a strong move down, we may still look to buy, but our stop loss may have to go below this low here because that is a safer bet. It's a safer stop loss, and it gives us more room to breathe. We will usually do that if we are starting to see some warning signs, but because we're not seeing warning signs, we don't need to put our stop loss all the way below this low because it's more than likely that we are going to see a reversal in this area given everything that we've seen. So we put our stop loss below the 786. Now, what about targets? There are two different targets you can use when you're trading pure price action and trading swings like this. By the way, this is a 5-minute Bitcoin chart. I probably should have said that earlier, but it doesn't matter because this works on any time frame on almost any market as long as you're fluent in the language. So let's talk about the targets. There are two targets we can use. One is the very simple strategy of using the ABCD pattern. That is, you take the swing that you're trading from low to high, you copy and paste that, Control C, Control V, and you just put this at the new higher low. The only trade-off with this is that if price goes lower, you do have to put this target lower as well because you have to put it at the lowest point for that higher low. In this case, it's going to be here as of right now, and we can target this point right here. This is what's called an ABCD D pattern. So it's just an equivalent move higher. Our risk to reward is 2.89 as of right now, and that's great. If this goes lower, our risk to reward might suffer a little bit because, we have to put the ABCD pattern from the lowest point that you reach. So if you want to avoid this, or if you just want a more static target in general, you can use the Fibonacci extension tool and go from low to high, back down to the low, and you can target the 127 Fibonacci extension. This is just usually where price tends to go. Once you break through a new high or a new low, you usually get something that looks like this, and then price starts to pull back lower. This target doesn't actually ever change because it's based off of this swing here. So if you want a more static target, you can target this, but your target will usually be smaller, and that is the trade-off, right? So let's take a look at what happens here. Let's target the ABCD pattern in this case, because again, we're confident that this is a strong uptrend. Let's just place a buy here, and let's put our stop loss here, our take profit up here. Okay, we're risking $800 to make $2,740, and let's see what happens. Okay, and there it is. As you can see, price did start to kind of fart around here for a little bit, but eventually we moved up higher and hit our target. And so that is an example of a trade that you can take if you understand the language of price action. If you understand the 3 Ps, the pitch, the projection, and the pullbacks of each move, as long as you break them down logically, see what is increasing in strength, what is decreasing in strength, and use that to your advantage to gauge where price is likely to pull back to and go in the future, you can easily make money in the market. It takes a while to master, but once you understand it, you will find a completely new freedom when it comes to analyzing the markets, because it is a big relief knowing that you just need the chart and that is it. No indicators. You're not relying on anything but what price is telling you. If you want to go and trade this exact strategy on the crypto markets, the 5-minute time frames, and if you want to get into crypto trading specifically, I highly recommend Phemex as the broker to go. I'll put a link in the description down below. They connect directly to TradingView, which is very nice. You can trade directly off of TradingView. They offer a lot of flexibility when it comes to US clients, right? Because a lot of crypto brokers don't operate in the US. They have one of the easiest to use platforms for trading crypto. So if you do want to trade price action just like this on the cryptocurrency markets, which are super hot right now, and this type of trading is working very well, check out Phemex. I've been using them for many, many years. Again, I'll put the link in the description down below. Thank you guys so much for watching. Let me know if you learned something new, like I told you you would, in the comments down below. Let me know if you have any questions for future videos. And if this helped you, all I ask is that you either share this with a trading buddy of yours, like, subscribe, do all of that good stuff to help support and spread the word. Thank you again, and I'll see you in the next video. Peace.